Hey everyone, welcome back to my channel. So today we're going to talk about how Warren Buffett believes most people should invest. Please make sure to hit the like button. Please make sure to subscribe to the channel. You know I post every single day at 8 a.m. daily. I am tired. But I'm here because I need to give you the content that you all are requesting. And you clicked on this video because you believe in me to give you the best content. So please hit that subscribe button. Please like. And we're about to get into this topic. Thank you so much for hitting that like button. I really do appreciate it. So Warren Buffett believes that most people should just invest in the S&P 500. Why does Warren Buffett believe that most people should invest in the S&P 500? So I've already given you one of the answers, but the S&P 500 is an ETF, and it composes of the top 500 companies in the whole stock market. What does that mean? Stocks are just companies. So you're going to take the top 500 of them, and that's the S&P 500. The S&P 500 does have an expense ratio of 0.001%, and they also have a dividend that is very cheap, 0.97% at the time of making this video. So you're going to get more dividends than expenses, which is great. And then the S&P does go up in value 7 to 11% per year, with 10 in a 10-year span is typically going to have 3 bad years and 7 good years. So overall, you're going to be making a lot of money over time. And if you have the S&P 500 for a 40-year period, you're essentially going to have 3, 6, 9, 12 bad years and 28 good years, which is more than double the bad years, right? All right. So with that understanding, 12 bad years, 28 good years, you're going to make an insane amount of profit over time. And it takes absolutely no knowledge of investing. You don't have to work hard. So Warren Buffett is saying the average person who is obviously not watching this video, because you're not average if you're watching this video, you want to improve your life. You want to understand finances. You want to understand how money makes you more money. You're not an average person, because the average person won't even get that far. So if you got that far, make sure to comment down below, I'm not average. If you got that far, make sure to comment down below, I'm not average. Because, and it's not because I want your comment, to be honest. Most of you won't comment anyway. But it's because I will get a sense of pride just knowing that we're not average. Literally, I live my life to not be average. If the average person is doing something, I know not to do it, because I would be poor. I would be broke if I did it. If everybody's buying a new car, that means I shouldn't, because the price is up. The price is going to keep going up. If everybody's buying a new house, that means I should not, because the price is going to keep going up. If everybody's in the stock market, that means I shouldn't be right now. I'm going to wait. I'm just going to invest as normal, because that means the price is going up and it's too inflated. But when everybody's out of the stock market and everything's at a discounted rate, I'm buying as much as I can. When everybody's out of the real estate market because they think it's crashing, I'm buying as much as I can. When everybody says, oh, we're not buying a car right now, we can't afford it, I'm buying cash money. Okay? Yes, that is how I live my life. Not average. Because if the average person is doing it, it's probably the wrong thing to do. So, in Warren Buffett's case, he's saying these people are so bad with money, they should just invest in an ETF, an exchange traded fund, S&P 500, that invests in the top 500 companies. Because if you buy all 500 businesses, some of them have to be successful. And when they sell the bad ones, they're going to buy the good ones. So you're not really losing money, right? Because when you sell 200 of the bad businesses and you put it in the 300 businesses, you already got the 300 businesses. So even if those 200 fail, you didn't lose any money, because the money is still within that 500. Does that make sense? So When you diversify and spread it out that much with just one ETF, you're sheltering yourself from any significant losses, any real bad losses. And so because of that, you're in a good shape, you're in a good place to where all you got to do is focus on making and earning money from your job. And what's going to happen is that ETF is going to do all the work for you. They're going to manage that. They're going to figure out what investments they should be having in their portfolio, and then they're going to allocate resources to that, a percentage towards that. And all you have to do is continue to invest in this ETF, and over time you're going to get 1 share, 2 shares, 3 shares, 4 shares, 5 shares, 6 shares, 10 shares, right? And that is essentially what Warren Buffett is saying that the average investor should do, not you, right? Because you, yes, you're going to buy the S&P 500. Yes, you're going to do a few of those things. But if you're truly motivated, you're going to do more than that. And if you're not motivated, it's okay. Buy the S&P 500, have your 7 to 11% returns, and live a modest to good life. That's absolutely fine. But again, I average 22 to 28% returns every single year, and it has never failed. I think the worst year I've ever had was back in college, where I did like a 18% return, and that was like 6-7 years ago. There was one time I saw a 12% return. I thought I was going to end the year on that note, but I think I did like 16 to 18%. But just know, I've never did average returns. I've never had 7 to 11% returns, and I don't plan on it. So if you don't plan on that, then you have to diversify further. Do I have the S&P 500 in my portfolio? Yes. I have VOO in my portfolio too. Yes. I have 30 companies in my portfolio, and 2 of them is the S&P 500 and VOO. That means I got 28 other companies. I think I only have like 4 ETFs in total in my entire company. No, I might have more than that. I might have like 5 or 6. So I got VTI, I got VOO, I got NOBL, I got the S&P 500, I got O shares. That's for sure. I think I might have the Dow Jones in there too, DOW. That would be 6. I might be missing any. I gotta go over my portfolio again. I just look at the numbers every single day. That's all I care about these days, because I do an analysis of my portfolio at least once or twice a year. A lot of the times it's right before the New Year's. I'll look at my portfolio and see, do I want to take anything out? Do I want to put anything in? That's kind of how I average things out. Unless I see a real good stock that I really, really want. So, for example, I sold all my Disney stock and I bought a lot of Facebook this year. That's because Disney has been underperforming, and I don't really have a lot of trust in Disney. Since COVID, they've been horrible, and then after COVID, they've been horrible. So I said, let me buy a company that has always been good to me, which is Facebook. And so, yeah, that's I don't do that often. I truly hate to sell companies, and so I truly don't want to do that. But that was just something that happened. So Warren Buffett is saying, don't sell companies, don't buy companies, just buy the ETFs, just buy the S&P 500, just buy the top 500 companies, and you'll be fine. What do you think about that? Do you think that that's a good strategy for you? It's definitely the best strategy for the average American today. It doesn't require any brain power. It doesn't require you to have to do any legwork. It doesn't require you to even think. You can be a robot and go about your life. You can do whatever you want. You can go on every vacation you want as long as you're investing. Set it and forget it. You don't have to think about anything. You don't have to buy acorns and lose $2, $3, $4 a month. You can just buy the S&P 500 and be good. So what do you think about that? What is your process? Let me know in the comment section down below. I truly, truly am interested. And I will see you on the next one. Peace.